To another exciting episode of World of Business, your weekly update into trending news and latest developments on the stock markets. Is also on this show, we herald unsung but thriving business entrepreneurs. My name is Tafara Bendaguta. Now, with Zimbabwe's year-on-year inflation in the Zimbabwe Gold currency falling to 4.1% in January. On this episode, we're looking in detail at Zimbabwe's return to single-digit inflation, a development many economists describe as a milestone towards price and economic stability. But before we get into that, we're going to give you the exchange rates as they are. The Zimbabwe Gold to the United States interbank rate was at 25.56 ZiG. The Zimbabwe Gold to the Great Britain pound interbank rate was at 34.93 ZiG. The Zimbabwe Gold to the Euro interbank rate was at 30.45 ZiG. The Zimbabwe Gold to the South African Rand interbank rate was at 0.62 ZiG. The Zimbabwe Gold to the Botswana Pula interbank rate was at 1.96 ZiG. We also give you commodity prices as they are on the global markets. Gold per ounce traded at $5,081 after it went up by 1%. Silver per ounce traded at $82.16 after it went up by 2.21 percentage points. Copper per pound traded at $595.95 after it went up by 0.61 percentage points. Platinum per ounce traded at $2,118 after it went up by 1.53 percentage points. That's it for the first segment. Do stay tuned here on World of Business, only on ZB. Our second segment of World of Business, and on this segment we're looking in detail at Zimbabwe's return to single-digit ZiG inflation, a development many economists describe as a major milestone towards price and economic stability. Now in the studio, I'm joined by Mr. Persistence Gwanyanya, a renowned economist and a member of the monetary policy from the RBZ. Mr. Gwanyanya, welcome to the show, as always.
Thank you for having me on the program.
Yes. Now we're going to just jump straight into it. How significant is Zimbabwe's return to single-digit ZiG inflation for the broader economy?
It's significant, it's monumental, it's remarkable in that it is happening after 27 years. We achieved a single-digit inflation of 4.1% in January this year, 2026, on the domestic currency. And this is the first time we've done so. You remember, especially for Zimbabweans, we went through hyperinflation before we dollarized. And then from dollarization, as we've struggled to sustain dollarization, we returned to volatilities. And we have been experiencing chronic inflation since then. And now, this is the first time. So it is something worth celebrating.
It's the first time happening in almost 3 decades that
Yes.
we've reached a single-digit inflation in the ZiG currency. Now, what key factors have helped anchor inflation at these lower levels?
As they say, inflation is always and everywhere a monetary phenomena. And this is what has now become synonymous with inflation. This is the monetarist thinking of inflation. The monetary authorities have done a very good job in containing monetary expansion, in containing money supply growth. Our money supply growth has been well managed at less than 2% month on month from above 10% previously. And this has translated into a low and stable inflation that we're seeing currently. But also, this monetary containment is not only the effort of the central bank, but it is reflective of the efforts of other complementary parties in the equation, especially Treasury. As
I
they
was
say,
about to ask to name names. It's okay.
Yes. So Treasury is also supported the monetary authorities' efforts to manage money supply growth by maintaining low budget deficits at less than 3%, which compares favorably to prior 2018 budget deficits of above 10%. So inflation has always been a result of monetization of deficits. Now, the containment of deficits below 3% by Treasury has meant the reduced incidences of monetization of deficits. Monetization of deficits mainly relates to the borrowing of Treasury or the Ministry of Finance on the central bank to finance the budget deficits. And you may want to know that the Ministry of Finance has not been borrowing from the Reserve Bank. They've maintained their borrowings at 0%, which is a break from the past.
I was about to mention, yeah, it's the first time that we are hearing such. That's the RBZ is not lending out money to the Treasury, so the Treasury is doing a good job.
Yes. So Treasury is doing a good job, but also it also did a good job in assuming or cleaning Reserve Bank balance sheet. You know, in sometimes in May 2023, the Minister of Finance announced that Treasury was taking over the debts at Reserve Bank. I think then some multiple billions of dollars from the balance sheet of Reserve Bank to Treasury. And this has reduced the incidences of printing of money to finance those debts. So they are now being financed from Treasury and through the budget, which has helped and translated into a low and stable inflation environment we're seeing. But also important is that the Monetary Policy Committee and the Reserve Bank, they also embarked in what we call a tight monetary policy stance. And by tight monetary policy stance, we are trying to support the growth in money supply, and that tight monetary policy stance was reflected in the interest rate policy.
Mr. Gwanyanya, let me just bring you back. We're looking at the figures. You were talking about figures, and I wanted to get into that. Let's look at the inflation. In December last year, the inflation was at 15%. January this year, it's now at 4.1%. What could have caused this? It's a positive trajectory that we're heading in, but what could have caused it from a double figure to a single figure that's less than 5%?
So you want to know that our inflation this last year peaked at 95.8% in July. And since then, inflation has been on a downward trajectory, closing the year at 15%.
From 96%?
From around 96%. And then as we started the year 2026, that is in January, our inflation had gone down. And this is also reflective of the base effect. Remember last year in 2025, our inflation actually peaked at around, that is the ZIG inflation, month-on-month inflation, it peaked at around 10.5%. And that was following the adjustment that happened in September 2024, when the inflation peaked and the exchange rate depreciated significantly. So that base effect, where inflation peaked on a month-on-month basis to 10.5%, is also reflected in January this year, because we are starting from a higher base. Yes. So that reflected the low inflation figure of January 2026. But the efforts that were done, disinflation efforts, were also to a greater extent contributory to the low inflation figure that we experienced, achieved in 2026 January. Normally, prices are revised at the beginning of the year,
yes.
especially prices relating to contracts, be they rentals, be they any other contracts. They may need to wait until the beginning of the year, in which case most contracts would run up to the year end and are due for revision the beginning of the year. And it's unsurprising that these revised prices also got into the inflation numbers for January to contribute to the low and stable inflation figure of 4.1%.
Now, looking at stability, which sectors do you feel need to perform strongly to support sustained price stability?
So I think from the development so far, inflation development, the next and most important step is to get this inflation embedded in the economy, entrenched in the economy, which speaks to sustained inflation. Now, to sustain inflation, you need the real sectors of the economy to support the disinflation efforts. So we have seen significant progress on the real sectors of the economy. Our economy is estimated to have grown by 6.6% in 2025.
Yes.
But the new estimates are even higher. Others are talking about 8.5%, which is quite commendable.
But what is the government's projection?
Going forward, we're projecting 5% growth in 2026, driven by the growth in the agriculture sector, growth in the manufacturing sector,
mining,
growth in electricity, growth in mining, growth in tourism. We all want that to anchor our inflation. But outside that, there's also need for the currency to continue performing. You asked me previously the question why our inflation was managed low at 4.1%.
Yes.
And it is common sense that now it has become common sense that inflation traces or is largely correlated to the exchange rate. What happens on the exchange rate reflects on the inflation in Zimbabwe. So our exchange rate has been largely and relatively stable last year and since we introduced the ZiG currency. And that stability, like I've indicated, can also be traced to the functionality of ZiG, which is a currency which is backed by precious minerals, especially gold and foreign currency. And the backing of that currency is important to guarantee convertibility. So it's that convertibility which is important to guarantee stability of a currency, especially for the corporates that access the interbank market. And we have seen that stability translating into that stability in the exchange rate,
Mr.
translating
Gwanyanya,
into low levels of inflation.
Let me just cut you there. Our time is running short. I'm curious, what external or global conditions could play a supportive role in keeping inflation stable beyond 2026?
The global economy developments from that economy are very important for the Zimbabwean economy, which is a small economy and a commodity-dependent economy, which I think is also an issue that we need to address, that we are a commodity-dependent economy. So the global economy generally is slowing down in terms of the growth. This year, the global economy is expected to grow by 3%, and which is below the previous averages. But as the global economy,
Mr. Gwanyanya,
global economy slows down, we have seen the rally on the gold prices. The rally on the gold prices has been very beneficial to the Zimbabwean economy
Mr. Gwanyanya, I'm going to have to cut you short. Our time is unfortunately running out. It's always a pleasure having you in the studio, and you know we can go for hours and hours talking about it. So that was Mr. Gwanyanya helping us unpack what it means that the Zimbabwe inflation has dropped to 4.1%. Now, do stay tuned. We got more to unpack on the third segment of this show. Welcome back to the final segment of World of Business, where we put the spotlight on our entrepreneur of this week. Now, in support of the government's National Development Strategy 2 agenda, this week the World of Business team spoke to Dr. Tendesayi Mushamba, a local entrepreneur championing education entrepreneurship. Let's get more from our field reporter, Cellah. Cellah, over to you.
Thank you so much, Tafara. On this particular segment, we take pride in celebrating our local entrepreneurs that are doing various initiatives in supporting the government's National Development Strategy. Now, the official launch of the National Development Strategy 2 on November 17, 2025 by His Excellency Dr. Emmerson Mnangagwa. Education remains a priority for driving skills, jobs, and human capital development. Government continues to support different initiatives in the education sector. Speaking of entrepreneurship in the education sector, today I'm joined by a renowned educationist who has contributed immensely to the education sector of Zimbabwe. I'm joined by Dr. Tendesayi Mushamba. Doc, thank you so much.
Most welcome. How are you?
Thank you.
Okay.
Maybe briefly, what would be your remarks towards the launch of the National Development Strategy 2, looking at education, the transition from NDS 1 to NDS 2?
I would like to first extend our deepest gratitude to His Excellency Dr. Comrade Emmerson Mnangagwa for his visionary leadership and unwavering commitment to transforming Zimbabwe's education landscape. His dedication to the empowerment of our youth through initiatives like NDS 2 is totally commendable.
If we look at our NDS 1, there was emphasis on the human capital development pillar, looking at human beings as the capital whose skills can be used to innovate and to industrialize. How is your school making use of this strategy in order to create skills, to innovate, and to create human beings that can then be used to help industrialize and to innovate?
We used normally to practice more on pedagogy and andragogy and forgetting cognitive skills through skills acquisition. And this aligns seemingly our ambitious goal and also the goal of the Minister of Primary and Secondary Education to construct more nearly 900 new schools under NDSI, and also addressing historical education gaps and promoting equitable access to quality education, thereby reflecting a commitment to social justice. So the initiative in NDS 2 is prioritizing integration of emerging technologies, expanding internet access via the Presidential Internet Scheme.
You made emphasis on how you are preparing the young people for the different skills that they're going to partake in the future. How is your institution or your various initiatives or strategies that you're using in the school helping prepare young people for economic priorities, now getting into the world, now using these skills to help us economically?
Okay, looking at our schools, we are placing significant emphasis on STEM education, fully committed to cultivating a generation poised to innovate and drive forward in sectors essential for economic development. And if we look at our prime illustration of our impact is on Wilbert Ndongwe, a 20-year-old entrepreneur and a former student who established his own company, which has grown SADC now, the company is Trans Energies, an energy project that is generating meaningful opportunities of young Zimbabweans and addressing critical social issues such as drug abuse. And additionally, we also have another former head boy, Sarawoi. This is exemplifying entrepreneurial spirit and the dedication, having begun his journey as lower 6 students at champion educational environment. And Sarawoi has demonstrated how our educational environment is nurturing innovation and creativity.
So what role do private youth-led schools play in complementing public education under the National Development Strategy?
Right. If we look at private schools, private colleges, independent colleges, they are serving as a pivotal partner in enhancing the educational landscape, providing pedagogical and andragogical innovations that can reinvigorate public education systems. So by adopting a culture of cutting-edge teaching methods, these institutions, they are trying to close the gap by delivering quality education that effectively complement existing public offerings. So diverse educational programs, they are now tailored to meet local economic needs to ensure that students, they acquire relevant skills.
Dr. Mushamba, how is government policy enabled youth entrepreneurship in the education sector?
Okay, government policies, they have been very instrumental in empowering youth entrepreneurship with the education sector by providing essential funding and grants to aspiring educators and innovators. And this financial support is crucial for launching new educational initiatives. And the Minister of Primary and Secondary Education, with the President of the Republic of Zimbabwe, they have also opened doors for all private players with the financial muscle to boost up the business. And you can see also the results that are coming also from the private sector. They are also august. They are also impressive. So I would like to thank also the President of the Republic of Zimbabwe and the Vice Presidents, the Minister of Primary and Secondary Education, for allowing us to enter into the education arena. As you can see now, infrastructural development is also being done by the private sector. The government has enacted a foundational legislative framework that includes the 2023 amendment of the Manpower Planning and Development Act, Chapter 2802, and the review of the legislation for all the country's 12 universities.
Dr. Mushamba, you've spoken at large about how you've made use of the human capital development pillar. You've created youth, you've created people that have gone into the world to industrialize. You've given us several examples of students that are products of this institution. But lastly, before we close off the segment, what partnerships with the government would help strengthen education outcomes under the National Development Strategy 2?
The government has allowed us to also start our own private colleges. And private colleges in Zimbabwe, they have significantly complemented the national education system by offering flexible, diverse and often specialized learning opportunities that has bridged gaps in the formal public sector. Under NDS 2, various key initiatives related to starting schools, they are reinforcing our commitment to the national education vision. The Presidential Internet Scheme aims to improve internet connectivity in schools. That's a critical factor for effectively integrating modern technologies into the education landscape. And additionally, government investments in technical and vocational training support the establishment of workshops that enhance student practical skills and employability, and align with the broader vision of transforming Zimbabwe into an upper middle income society by 2030.
We sincerely hope that the partnerships between the government and the private-led institutions can continue to bear fruits under the NDS. Thank you so much for joining us.
Okay.
That was Dr. Tendesayi Mushamba on this week's segment of our Entrepreneur of the Week, one of the entrepreneurs in Zimbabwe championing education entrepreneurship in Zimbabwe. Be sure to join us again on our next segment. It's back to you, Tafara.
And that was our field presenter, Cellah. And that's it for this week's edition of World of Business. From myself, Tafara Ndaguta, and the crew behind the scenes, it's back to business.
ZBC News, the real African voice.